Good evening, namaste to each and every member present here. I welcome you all for this study circle meeting on the topic inventory, audit and accounting issues. And to dwell upon this subject, we have CA Vikas Oswal sir with us. Can I request CA Harish Ahuja sir to escort the speaker onto the dais and then welcome him with floor voting. I have the privilege in introducing CA Vikas Oswal sir. Vikas Oswal is a practicing chartered accountant. He is a fellow member of our CA Institute and is also a company secretary and a diploma in, he holds a diploma in systems audit from ICI. He has been in practice for past 2 decades in auditing, taxation and company law matters. He is currently teaching auditing to CA students across India. He has published books on auditing for students in CA final and intermediate courses. He has presented many papers on auditing, accounting standards on reputed forums across India. He has conducted workshops on auditing standards, corporate governance, accounting standards and internal auditing. With this brief introduction, I present before you CA Vikas Oswal sir. Over to you.
Very good evening to all the members. Today I bring you a very contentious topic, that is inventory. It is very easy, very simple, but yet it is very contentious in nature. And most of the time the departments, they always scrutinize the inventory because this is an area of high manipulation. In Bombay, a Bombay-based firm, MH Dalal and Company, their auditors, Devang Dalal, he received a notice from NAFRA for investigation under section 132 of the Companies Act. Now, the Devang Dalal was an engagement partner and he was an auditor of a company called Man Industries based in Mumbai. Man Industries is a company which manufactures the steel, let's say they manufacture the carbon steel pipes, and these pipes are used for transmitting let's say oil, crude oil, or let's say any petrochemical products or potable water. So it is used for that purpose. Now there were a lot of lapses observed by NAFRA while they went through the working papers of the auditor. Now the first and the foremost thing is what NAFRA is doing is that going through the working papers, and we have to take SA 230 audit documentation very seriously, because in some cases auditors are not maintaining audit documentation for minimum 7 years. Retention period is there, but the audit documentation is not maintained. To their surprise, there were many issues, and one of the issue was that physical inventory counting was not conducted by the said auditor. The inventory constituted 28% of the total current asset, and the auditor has not conducted the physical inventory counting. Now you have a standard SA 501 which deals with existence and condition of inventory. It also deals with segment information and claims and litigation. But one of the very important area, SA 501, deals with what? Existence and condition of inventory. NAFRA said that where is the audit documentation? Where is the paper? Where are the papers? Where are the documentation? The documentation for the physical inventory counting, where are they actually? So the auditor was not able to produce that documentation to the satisfaction of NAFRA. They produced certain documentation, but NAFRA was not satisfied. They said that these documentation are not proper. So now what NAFRA did is that see, this is not happening, you have not done the audit as per standards on auditing. So they invoked second schedule of the CA Act 1949. Now second schedule of the CA Act 1949, because it is very dangerous, because see, you have first schedule of CA Act 1949, you have second schedule of CA Act 1949. and NAFRA has now become the auditor of the auditor. We are auditors for all the entity, now they have become our auditors. So they invoke the second schedule, because see, what is first schedule of CA Act 1949? First schedule, it talks about when any misconduct happens, it affects the CA community. Example, a CA in practice should not advertise. A CA in practice should not share his fees with certain professional. A CA in practice should not accept a share of fees with certain professional. So the first schedule affects the CA community as a whole. That's it. It does not go outside. But the most dangerous is second schedule, because second schedule, it talks about those misconduct which affects the society as a whole. So which affects the investor, which affects the shareholder. It talks about those misconduct. Now what NAFRA highlighted, that the auditor has violated clause 5, 6, 7, 8, 9 of the part 1 of the second schedule of the CA Act 1949. Now what is this clause 5, 6, 7, 8, 9? Clause 5 deals with the aspect of it talks about that where CA in practice will be guilty of professional misconduct if he fails to disclose the material fact known to him. And clause 6 talks about a CA in practice will be guilty of professional misconduct if he fails to disclose the material misstatements known to him. Clause 7, which is highly invoked clause, which talks about where CA in practice is grossly negligent of his duties. Now what do you mean by grossly negligent of his duties? When he does not follows the standards on auditing. No, I have followed the standards on auditing. Okay, where is the documentation? Documentation is not there. I did the physical inventory counting, but where is the documentation? We always believe in what is written. Where is the written documentary evidence that you have gone for physical inventory counting, you were present, did you take a letter from the management on that particular day? Was there an exchange of email? Which staff of yours has gone? Whether you have evaluated the instructions of the management? There are several questions we have to prove to the lawmaker. And inventory, we all know that sometimes it is used as a balancing figure. So our profit is very high, reduce the closing stock. So our profit is very less, increase the closing stock. It has become like a balancing figure. An institute also, the lawmakers also are very particular that why it is happening like that. And that is why this topic is very, very important, extremely important. Clause 7 talks about where a CA in practice is grossly negligent of his duties and does not exercise due diligence. You are telling that you did physical inventory counting, but where is the proof for that you did the physical inventory counting? Clause 8 talks about when CA in practice fails to obtain sufficient information or by applying the audit procedure, means he has not obtained sufficient evidence for what work he has done. And clause 9 talks about where he fails to inform, where he fails to imply that what are the procedures to be applied. If he has departed from those audit procedures, he has an obligation to disclose that. But if he fails to disclose that what audit procedure he has applied, then the CA in practice will be guilty of professional misconduct. From clause 5 to clause 9, these were the clauses were imposed on the auditor. The auditor was barred for practicing in audit for next 5 years, a penalty of 10 lakhs, and on the audit firm there is a penalty of 50 lakhs. This is the implication that has happened. Okay, NAFRA will touch listed company, it will touch large company. We don't deal with such kind of client. If they have started doing this, then what will happen? All the lawmakers will also start doing this actually. So we have to be very careful and cautious. We should not say that no, it is out of syllabus for us. It will not happen to us. It will be the next person actually. So that is why, my dear members, first of all, let us focus on the audit documentation. Yes, during the audit period we are very busy. The WhatsApp has come, email has come, by telegram some message has come, some document is there actually here. It is very important that what you do now after the audit is completed. Hey, no work actually, we are relaxing actually like that. No sir, now the work should start. Now you should assemble all the audit documentation. SA 230 highlights that within 60 days, all the audit documentation should be assembled, closed, and it should be highlighted here. This may happen 2025, if you are doing a stat audit of a bank, stat audit of a branch of a bank, peer review will be mandatory. What will you do then? Peer review is the internal body of ICI. Now there is two things, quality review and peer review. Quality review is done by Ministry of Corporate Affairs. Whereas peer review, where NAFRA is involved, where straight away they say you're banned like that. But peer review is our internal process actually. Hey Nodappa, please maintain the audit documentation. So our peer review is not so aggressive like quality review. No, you are not preparing audit program properly, please prepare it. No, this audit evidence you obtained is not proper, please update it. So it is more of a nudging, more of a slow push which ICI is giving to the members. Please comply the law, follow the law. It is not an aggressive approach. But when it comes to quality review, it will become an extremely aggressive approach. And moment they go to second schedule, it also talks about lifetime ban also. So that is why, my dear members, this discussion is very much relevant actually here. We never know when NAFRA may extend their wing actually here. So that is why, item by item, today most relevant item is what? Inventory, where many a times we are not doing physical inventory counting or we are not present on that particular day. What is going to happen? But many things may go for a toss. That is the thing actually here. My dear friend Prakash is sitting here. He was telling me one incident. I was surprised actually here. What he told is that he had a friend and he used to prepare for CA final examination. Whatever he used to never understand in the final examination, he used to never read that. Hey, the Arthagala, this is not going in my head. It will not come in the examination. And what used to happen in examination, that question was never asked. So what is not going in my mind, it will never come. Now, for me or for him actually here, whatever we are not understanding, I think that question only will come in the examination. That's the thing actually here. So we are not born with that kind of luck or that kind of brightness that okay, we don't read that it will not come, hey, it will not touch me. That kind of careless approach we cannot have, and that is why our discussion is more on all the angles we are looking at actually. First of all, I would like to highlight that when we are discussing about the inventory, I would like to go into 8-part approach for inventory, 8-dimension approach of inventory. If we look into this actually, almost 90% of our problem is solved actually. Here and there some issues may be there, but at least let us look from all the angles. First of all, what is the meaning of inventory? What do you understand by inventory? What is the meaning of inventory? Inventory is an asset which is used for sale in the ordinary course of business. It is an asset which is used in the production process, in the normal course of business. It is used for processing purpose, it is used as a supplies, it is used as a maintenance item actually. So inventory is something which is used in production in the normal course of business, or it is used for sale in the normal course of business. So that is the meaning of inventory. So if it is a manufacturing concern, it will comprise of the raw material, the work in progress and the finished goods. When it comes to a trader, if it is a trading concern, then it will comprise of what you can say the merchandise, then they will be the best example for that. So any merchandise, any retail items which are there, they will be acting as an inventory. So inventory is something which is used for sale in the ordinary course of business. There is a cement manufacturing company. The cement manufacturing company, what it does, it engages various distributors, it engages various agents that you purchase our cement, you sell the cement across the state, across South India. All the distributors, they agree, okay, we'll do that. Now, for whatever cement you are purchasing from us and selling, there is a target discount which is being given. We'll give you a discount. If you purchase 50 tons of cement from us, I'll give you a discount of say 5 rupees on per bag of the cement. And if you purchase more and more cement, say 100 tons actually, I'll give you gold coin, I'll give you some white goods. Now when I say white goods, it means what? Like the washing machine, the fridge, the television. These are the things I'll give you. Fine, this was a deal which is being done. Now, they have a system, they have some multiple distributors, they have some 50-60 distributors across with them, and they have a tracking system as to how much a particular distributor is purchasing. Fine. Now, the cement manufacturing company is purchasing, apart from their limestone and other raw material for manufacturing cement, they are also purchasing this television, refrigerator, washing machine, plus gold coins they are purchasing. Now, the question here is that whether the gold coin which is being purchased, or whether the what you can say, the white goods like say fridge, refrigerator which is being purchased to be given to the distributor, whether it will be an inventory. Can I call this as an inventory? Whether it will be an inventory? Yes or no? Whether it will be an inventory? Come on, right or wrong does not matter actually here. We are having a family discussion. Come on. Yes or no? Whether it will be constituted as an inventory. I am purchasing it, I am keeping a track of it actually, and I'm thinking of that whether I can avail an ITC on it actually. Yes, when I give the cement, plus I am giving the gold coin, plus I am giving those goods like washing machine, television, definitely it's a case of what you can say mixed supply from the GST point of view. Whatever rate which is applicable to the cement will be applicable to these items. Okay, fine. That part we will understand that. But is that all those gold coin and those white goods, are they inventory? Whether it will be an inventory? Yes or no? No. How many of you say no? Raise your hand. No. Very good. Why no? Why no? Come on, why no? Yes.
Not for sale.
Not for sale. Very good, sir. Not for sale. Not for? Not in the ordinary course of business. But to achieve my target, to achieve my collection target, I am trying to give a incentive to these people. Why it cannot be an inventory?
Cannot be valued at market value or lower.
It's not in the ordinary course. Your different items you are purchasing. Yes, yes, sir.
It's not in the ordinary course of business because market value or cost we are not calculating for that.
Correct. Yes. So that cannot be considered as inventory. Very good, members. Very good. It is not an inventory actually because my main business is to sell cement. This is more of my selling expenses, selling overheads. This is more of an incentive I give it to the distributor. Now, coming up to say we see some juice, fruity, or say paper boat. Now these juices are sold in a pack actually. Packing is done for that actually. Whether packing will be considered as an inventory. I manufacture fruity juice, I manufacture a juice for a paper boat. Now I put it in the container and I close it and sell it. That container, whether it will be inventory? Yes, why it is an inventory?
Part of the product.
Part of the product, and I cannot sell the product without that. I cannot sell the product without that actually. So it is definitely considered as an inventory. So a primary packing material will be considered as an inventory. Let me go forward. So I have a paper boat juice actually, so which is made of paper, which is made of certain lacquer, certain products I put it. Now I have a carton which I put some say 25 items of like say paper boat juice. Now that carton, packing material, will it be an inventory?
Yes.
Can it be an inventory? Yes or no?
Yes.
Yes or no? Now that cannot be considered as an inventory. That will not be a part of inventory because the primary packing will always be considered as inventory, but additional carton to disperse the item will be again a part of selling expenses. So we should be very clear that without this it cannot be sold. Example, an iPhone. iPhone comes with a packing, the primary packing. Okay, that is an inventory. The primary packing material is an inventory. But anything additional, which is to transport say hundreds of iPhone, putting in a carton and sold, that carton will not be an inventory. It will be a part of the selling expenses. Now there are some controversy. Example, there is a soap manufacturer. The soap manufacturer, what he does actually here, he purchases oil because you require oil to manufacture soap. So he purchases tins and tins of oil. So the tin is emptied in a container. You have an empty tin box there, lying there. Now that has to be sold. Now that empty tin box, whether it is an inventory, can I call that an inventory? So this is a raw material, that is oil. I poured the oil in a barrel, now it became an empty tin box. Now whether that empty tin box, can I call this as an inventory? Whether it will be an inventory? Yes or no? The answer is no actually, because my main intention is to sell the soap, and this is like coming as a waste or a scrap. It will not be considered as an inventory. So one industry highlights that the empty tin box or all these things are waste and scrap. We will not consider this an inventory. We will show it as a asset held for disposal. Asset held for disposal. It is not an inventory. If you go to other industry, like say a liquor, suppose say there is a bar and restaurant where people are consuming say liquor, like say for example beer bottle, the beer bottle is emptied, whiskey bottle is emptied. Now that whiskey bottle and empty bottle by that bar and restaurant, they treat this as an inventory, because now they say, okay, these empty bottles have been collected, it's a part of our business, now we are selling back to the manufacturer. The manufacturer will not recycle, he will just reuse it, he will just wash the bottle and reuse it. Now, whether that is an inventory, answer is yes. It will be considered as an inventory. So, how you interpret, how you take industry to industry, it is very much important actually here. So, in one industry they say that our business is to manufacture soap, this is like a raw material, we are not concerned. In other industry, like say liquor industry, they say that yes, we sell the liquor, but this is an additional item which we are getting, this is also a part of inventory. So now, if I sell this bottle, say to the manufacturer, he'll give me 5 rupees per bottle, 4 rupees per bottle, so why not? I will consider this as an inventory. So you have to see that whether the scrap, the waste, is it a major part of their items or not, that as an auditor, we have to evaluate. It is more important today to understand the business of the client. Gone are the days actually like that, because now we have to get into role of what? Decision making and problem solving. Hey, compliance, GST filing is being done, audit is being done, everybody will do audit, everybody will do accounting. But what is that extra, that value addition which we are giving as an auditor, how we are protecting our client, that is more important. So, as I highlighted the definition of inventory, I highlighted that it is held for sale in the ordinary course of business, in the process of production, consumption in the production of goods, for service and sale, maintenance, supplies, consumables, these are all coming as a part of what come on the inventory. There will be an inventory. First of all, what is an inventory? We should be very clear actually here. It is used for sale in the ordinary course of business. It is used for in the manufacturing process. It is consumed in the production of the goods. It may be a consumables. It may be a maintenance supply. These are all inventory. And what is not inventory? Like say machinery, spares, or servicing equipment, or standby equipment. Now there is a controversy on like say machinery spares. Example, say they have ball bearing. Now this ball bearing sometimes it is like say used for like say 3 months, 6 months. In 3 months, 6 months this ball bearing will go off. Now the life of that ball bearing is less than say a year. Now in such case it does not satisfy the definition of property, plant, equipment, then it can fall under the definition of inventory. Further, what inventory does not include? It does not include the financial instruments, it does not include the biological asset. Biological asset means the plant and animal, because they are dealt with the other standards. Actually there are other standards dealing with this. Generally because the valuation of inventory, what do we say? Cost or NRV, whichever is lower. And most of the items which are highlighted here, they are valued at the NRV. Similarly, work in progress for construction contract, we have a separate standard for that. Work in progress which is in the ordinary course of business for service provider. Further, shares, debentures and financial instruments. Then livestock, agriculture, forest products, mineral oils, ores. These are all valued at what come on the net realizable value, NRV, that is the thing. Further, as I highlighted that whenever we talk about inventory, what goes into manufacturing, let us also try to understand what is the manufacturing process, how a particular thing is manufactured. SA 315 talks about identifying and assessing the risk of material misstatement by understanding the entity and environment. Always one day, 1 or 2 days you have to spend in understanding the client's business. How the client business goes, it's very much important. So any industry which we are doing audit, it's very important that okay, what are the raw materials they are using, what are the consumables they are using, how the manufacturing process goes actually. It's very important to understand that. I was doing an audit of a entity where in the entity what happened, the NP ratio was more than GP ratio. So I said I will not sign the financial statement. Generally what is the saying? The GP ratio is always more than the NP ratio. How can a NP ratio more than GP ratio? No sir, it is like this. No, I am not able to understand, I am not able to accept. Then it was they explained me, sir, it's a jewelry unit where the making charges are high. We charge making charges, and that is why the NP ratio is always more than the GP ratio. So it depends upon industry to industry how we look at it. So now, first as I highlighted that understanding the business of the client, what are the items they are manufacturing, what are the main products of the client, it is very much important to understand that. I was reading about Leo Bakelite. Leo Bakelite in 1907, he was a person who invented the plastic called Bakelite. A plastic which cannot be destroyed by fire, which cannot be destroyed elsewhere, and which is resistant to heat. He brought that plastic called Bakelite. Now, basically what happens actually, so there are several items which are outcome of the crude oil, and one of the items is what? Plastic. So you extract naphtha at a different temperature level, and from naphtha you extract certain gases, and through that you manufacture the plastic. Now plastic industry, again what happens actually here, okay, these are the raw material for the plastic industry. So there are several items which are manufactured using the crude oil or natural gases, that's the thing here. So it becomes a output for various items. Further, again this is the same picture actually. Further, we have a client where they manufacture the cotton seed oil. Now cotton seed they crush under a temperature and then they extract the oil. Now I was surprised when I heard that sometimes the cotton seed oil is also mixed with the sunflower oil, because both are used for consumption, and that's the same here. So the first and the foremost definition which we have to understand that what is an inventory. Yes, I can use this item for sale in the ordinary course of business. I can use it in my manufacture of the product. I can also use it in the production process. And further, I can also use it as a consumables or a tool. Example, say, airline industry, you require a carbon fiber to manufacture a plane. Those tools, those nuts will be considered as the consumables, the spares, the lubricants will be considered as a spares in that particular case. So this is how it is. Now, the first part what we have to understand is that step number 1 is that what is an inventory. The second part which highlights about is that valuation of inventory. Now valuation of inventory is given in AS2, AS2 both highlight that it is valued at lower of cost or net realizable value. Now having said that, whether the following will be a part of cost of inventory. Now whether purchase price will include in the cost of inventory, yes members, yes or no?
Yes.
Yes. Custom duty, yes or no? Then trade discount, what we will do? Now we are in the second part, the valuation of inventory. So trade discount, what are we going to do? Trade discount, yes. Reduce the value from the purchase price. Then turnover discount. If you purchase a particular quantum from me, you will get a discount. Now, turnover discount is a variation of a trade discount, and that is also claimed as a deduction. What about cash discount for early settlement? Early settlement, yes. Whether it is a part of inventory cost? No. And then outward freight cost? No. Inward freight cost? Inward freight cost will be a part of inventory. And then you have duty drawback. Duty drawback, yes. Duty drawback, yes, it will be a part of inventory. It will be added back. Direct labor, as a cost of production, direct labor will be added to the value of inventory. Abnormal wastage of inventory, yes. Abnormal wastage of inventory. Yes or no?
No.
No, it will not be added as a value of the inventory. So the abnormal wastage of inventory should not be considered as a value of the inventory. This is certain, we are just highlighting the costing of the inventory. Now in case of Nagaprasad case actually here in 2022, again NAFRA highlighted passed an order. Now NAFRA, what they highlighted is that he is an auditor of a company called WNLL, Nagaprasad, CA Nagaprasad, and while conducting the audit of WNL, what they have done is that again, they have not done the physical inventory counting. So the auditor said, no, I have done the physical inventory counting. Okay, show me the documentation. Please produce the documentation. The auditor, the first document he gave was what? He gave a written representation or a certificate from the management about the quantity of inventory. He gave a certificate. They said, okay, this is a certificate. The second thing what he gave is that a stock statement which showed that the stock has been hypothecated to Bank of Baroda. This is the second document he showed to the NAFRA. He showed to the authority. They said, okay, you have shown us the stock statement. The stock statement shows that the stock has been hypothecated to Bank of Baroda and a management certificate has been obtained. But where you have done the physical inventory counting, you show us. Now later he agreed, he said that no, I have not done the physical inventory counting, then why it was highlighted? Now in the balance sheet of WNLL, the inventory constituted 36% of the total asset. 36% of the total assets were made of only inventory. And they said that major material item you are neglecting and you are not doing the audit up to the mark. And it is not serving the purpose. Further, they also highlighted that there is a violation of clause 7, 8 and 9 of the CA Act 1949 of the second schedule, part 1. There is a violation because here again it's a case of what come on gross negligence. So SA 501 highlights that as an auditor, I have to obtain a sufficient and appropriate audit evidence about the existence and the condition of inventory. What is it? Existence of the inventory as well as the condition of inventory. Condition in the sense actually here, is it saleable? Can I use it in the manufacturing process? Or it has been expired? All these factors are to be considered. Now, the most important thing is that the second stage of inventory is what? The second part of the 8th part is that ascertaining the cost. As I highlighted that we have 3 types of cost. One is the cost of purchases. Cost of purchases will include the purchase price minus the trade discount and the turnover discount. It will also include the taxes which are not senvatable in nature. They will come as a part of the purchase cost, the cost of purchase. The second one is the cost of the conversion. The cost of conversion will comprise of the direct labor. It will also comprises of the various production overheads. Now production overheads could be like say fixed production overhead, and also it may comprises of the variable overheads. Even that is also a part of the cost, and there are other costs which are involved. Now other cost example, suppose say a particular customer tells that I want whatever product you are manufacturing to my specification. Okay, we can manufacture that, but for that we require an expert. Okay, you call an expert. For that we require a research. Okay, no problem. So the research expenditure which is incurred for a particular product which is applicable to a particular product can also be added to the particular cost. Similarly, any kind of raw material which is purchased for that product for a particular design, a particular specification will be part of the other cost which is directly attributable to the inventory. Yes, we have engaged an expert for the manufacture of inventory. We have engaged a particular person for the manufacture of inventory, and that is why it can be directly attributable to the cost of the inventory. So, when I talk about the cost of the inventory, it comprises of the purchase cost, the cost of conversion, and the other costs which can be directly attributable to the inventory. Further, as we highlighted that there are exclusions like say abnormal wastage, storage cost. Now storage cost has to be excluded, selling and distribution costs, administration overheads, and also unallocated overheads. All these items are to be excluded when you arrive at the cost of the inventory. When we talk about the fixed production overhead allocation, see, always what happens is that the fixed overheads comprises of, like, say for example, say rent of a factory. Now that is a fixed production overhead cost. If the normal capacity of the factory is say 1 lakh unit, and where I incur expenditure of 30 lakhs, now in such case actually here I can allocate the cost, I can find out the cost that for a per unit of the item, 30 rupees will be the per unit actually. So I can allocate among all the 1 lakh units as 30 rupees per unit actually here as a fixed overhead. Now, when the production cost, the output is more than the normal output, like say in the last situation it is 1 lakh 20, then in such case also no problem, it can be allocated among all the costs. So it says that whatever cost which we are highlighting it actually, that cost we should take it. The last one should have been I think 30 lakhs, it is not taken, so it's a wrong number. So now the last one, 30 lakhs, if I divide by 1 lakh 20, so I get 15 rupees per unit, so okay, so that also can be allocated. So here we have to understand that the normal production, if the factory is running at a normal production, all the items can absorb. But suppose say the factory is running below the normal production. Example, in the second situation, it is producing 90,000. The normal limit is 1 lakh 90,000, and in such case what happens? The proportionate should only be taken and the balance should be taken to the P&L account. So production overhead are classified into two types. One is variable. Entire variable overheads can be added to the value of inventory. But when it comes to the fixed overhead, if it is at the optimum normal production level or more than the normal production level, no issues, entire amount can be allocated. But if the factory is running below the normal level of the production, then in such case, you have to take only pro rata basis and the balance should be transferred to the profit and loss account. Now, costs are NRV. Now, whichever is lower. Now, many a case what has happened, the accounting policy will highlight that the inventory is valued at cost or NRV, cost or NRV, whichever is lower. This is a right description of the definition. Now, in one case of Rajiv Bengali case, what has happened, NAFRA has highlighted that the auditor has conducted the audit. He has done the audit of a company, that is Trilogic Digital Media Limited. Trilogic Digital Media Limited, it provides media related solution, and this company is listed in BSE and NSE. Now, Trilogic Digital Media Limited, when they downloaded the financial statement, they said that as an auditor, we have examined the balance sheet, the P&L, the cash flow statement. But when they downloaded the financials, the financial did not contain the cash flow statement. They said, "Sir, boss, where is the cash flow statement?" No, it was not attached. So it means that you have not submitted the entire financial statement to us. The cash flow statement is missing. You are highlighting that you have examined the cash flow statement. Cash flow statement was submitted. Where it is signed, auditor has not signed, director has not signed. Again, an issue was raised with the auditor. Then they observed that the Trilogic Digital Media Limited, they saw that inventory in 15-16 was 12 crore. And in 16-17, the inventory became zero. They just squared the inventory to zero. They raised the question that, and there are other assets also which were taken to zero. They just written off the assets. They said that, okay, you have taken the inventory as zero. It means that the going concern assumption is not appropriate. When the going concern assumption is not appropriate, then in such case, actually here you have to prepare the financial statement on a realization basis. You cannot follow accrual basis or cash basis. Accrual basis you cannot follow. You have to follow cash basis of accounting when the going concern assumption is not appropriate. Why this issue you have not highlighted in the audit report, and why you have not given an adverse opinion to that effect? Further, they observed that they have given that inventory is valued at cost or net realizable value. Now, when they studied the notes to accounts, they have given the entire breakup of cost in the notes to accounts. but there is no mention of net realizable value. See, we are doing audit of a listed company, large company, we are doing audit, we have so many people, but we don't have time to read the notes to accounts. What we mention in the notes to accounts and what our audit report is highlighting, there's no match. There's no match. In one case, what has happened? The auditor has given the audit report heading as audit report. He has just given the audit report. Sir, you are violating SA 700 because SA 700 clearly highlights that the name should be independent auditor's report. Where is that independent word? Hey, no, small thing. What small thing? So we are violating the standard. Now in this case also, when you are giving accounting policy as cost or NRV, but there is nothing mentioned about the NRV. So again the auditor was reprimanded, suspended for 5 years by NAFRA. See, these are very small things, very small things, but having a very far-reaching effect. The first acquisition will be what come on the case or ground of what come on absolute negligence by the auditor. Coming up to NRV is estimated selling price and estimated cost of completion. Estimated cost of completion will come only in case when there is a WIP. Our estimated cost to make sales, this will include some sales commission will be part of it. So any sales commission. Now, whether following is cost for inventory, what about quantity discount? Quantity discount can I deduct as a part of inventory cost? Should I add, should I reduce? Yes or no members? Yes or no? Should I adjust? Is it similar to the trade discount? Yes, quantity discounts are similar to trade discount. Primary packaging we discussed. Is it a part of inventory primary packaging? Yes. Secondary packaging? No. Then factory rent?
Yes.
It's a part of the production overhead, so definitely factory rent. Electricity charges for admin office? Yes or no?
No.
No. Very good. Electricity charges for factory?
Yes.
Yes. R&D for improving the products?
Yes.
Will it be a part of the inventory cost? Yes. R&D for improving products and processes will be part of the inventory cost. Quality control employee salary, QC employee salary, will it be a part of inventory cost? Yes or no? Yes, it will be part. Storage cost? Storage cost? Huh? Very good. Warehousing will not be a part of it actually. Warehousing will not be a part. But suppose say storage cost of liquor. Necessary, yes. We have to prove it. Or like say pickle. Then in such case storage cost becomes very much relevant. My friend is working in a very big liquor company. He said, because do you know deep dive swimming? I said, I don't know. I don't know deep dive swimming. So he said, no, there is a assignment for you. I said, what is that link between deep dive swimming and my knowledge of that actually? No, the assignment is that you have to do physical inventory counting and we are having our storage units underwater. I was shocked. This is happening. So large, suppose some wine or liquor, some liquor which is being aged, sometimes they are kept under the sea. And they have professional deep dive swimmers who go keep there, who manage the stock. Now imagine we auditors are called for that for. I don't know this, but he was highlighting that he was making fun. He knows that I will definitely not come, that pressure of water, all those things, definitely it's not possible. But our articles will be definitely interested. After certain training they will be interested. So this is a surprising things, new change, a new trend. Storage costs, definitely no, in ordinary course. What about selling and distribution expenses?
No.
No. This will also not be a part of the inventory cost. The cost formula which we follow is FIFO or weighted average formula. This is the cost formula we follow. But certain inventory like that, like aircraft or like say any shipbuilding industry, they follow specific identification method. But for us, either it is a FIFO or weighted average cost method. I was talking to a CA, he told that why not LIFO? I said LIFO is not highlighted by the Ind AS 2 or AS 2. No, how it is not highlighted actually? Yeah, they clearly don't highlight about that and we don't follow LIFO. Now he gave me an example. He has a client where they purchase aluminium sheet. Now aluminium sheet is kept in a lot 1, then they purchase lot 2, then they purchase lot 3 and then they purchase lot 4. So in a lot 1, lot 2, lot 3, lot 4 they purchase lot wise. Now when they purchase lot wise, Now when a customer comes to buy an aluminum sheet, will he pull the sheet from the bottom or will he pull the sheet from the top? I said yes, he has to pull the sheet from the top. If he pulls the sheet from the bottom, his back will be broken. Definitely he'll go to hospital. He'll pull the sheet from the top. So what is purchased last is issued first. Why not LIFO? Is LIFO banned? Is LIFO banned actually by AS2 or Ind AS2? Answer is no. It is not banned. So they say that they don't talk about that. Because when you talk about AS1 disclosure of accounting policy, if for a fair presentation, for a better presentation, for a better valuation, if you want to depart from the accounting standards, you can always depart from the accounting standards. But you have to give a justification for that. I said, boss, you're right, I'm wrong. Now the way you're telling, no, why don't you put the lot one beside the other actually, why not this way? He said, sir, where is the space? Now, all those things we cannot tell the client actually. He says, this is a space, he keeps one above the above. So, its LIFO is not barred by the standard, but the standard is silent about the LIFO. So that also we can consider depending upon the case-to-case basis. But if we are following LIFO, we have to make adequate disclosure. Jewelers, they say that whatever the customer will say, this design he wants, I'll purchase the gold, make it and give it to him. So whatever I purchase last, I issue first. All the jewelers, they have a complaint like this. So old gold is there, it is there with us. They said, this is the one I want, I have a gold, you make it and give it to us. You add your gold and like that. So they said, this is the latest design, you get me from this place, okay, we get it. So whatever is purchased last is issued first. So most of the gold, so almost 60-70% of the gold is like that, why not LIFO? So again, yes, you're right in a way actually. So why FIFO or weighted average cost method are accepted? Because they give a better approximation of the cost, that's the thing here. But again, we cannot deny LIFO is not acceptable. The third aspect of inventory is what? The presentation and disclosure of inventory. The first we learned about what is the inventory. Second thing we learned about what you can say the how do you value the inventory, the cost of inventory. And next one is the presentation and disclosure. In presentation and disclosure, we highlight that we value the inventory at cost, our net realizable value. We also talk about the costing formula which we are using. Plus we are giving the segregation. What is raw material, what is finished goods, what is the goods which are held for trading, consumables, tools. So we are giving a complete segregation of entire inventory in the presentation and the disclosure. That's the thing here. Now, here one issue. Inventory is valued at cost and fair value. Is this statement correct? Is this statement correct? Is this statement correct? Inventory is valued at lower of cost and fair value. Whether it is as per the standard, whether it is as per AS2, whether it is as per the Ind AS, is this statement correct? Yes or no, members, come on. No, why? NRV, yes, NRV, fair value is not acceptable. Fair value cannot be taken into consideration. Inventory is valued at lower of cost and market value. Now these kind of careless items come in the notes to accounts, and suppose say NAFRA, peer review or quality review, anywhere we are stuck. This is a problem actually. No, how can you give this? Why are you using this word? No, market value, what is the difference actually? There is a lot of difference. So that is why we have to be very, very careful, cautious, running through the notes to accounts actually here. Very, very important that what wordings they are used actually here. Then, next one. The fourth aspect of inventory is what? Existence and condition of inventory. Now I highlighted that existence and condition of inventory, SA 501 audit evidence, specific consideration talks about the existence and the condition of inventory. Here I am talking about the physical inventory counting. As an auditor, we are doing the physical inventory counting. So when we are doing the physical inventory counting, what are the challenges? What are the aspects? Obviously, we are the observer, and the count of the inventory is made by the employee or the staff of the management. They have to do the counting and we have to be an observer. We are given an inventory count sheet. We have to match the inventory. I'll tell you, physical inventory counting is so demanding, dear members. Definitely, like I always keep telling that the best sleeping tablet is the hard work, and that one day when you go for physical inventory counting, you're so alert throughout the day. Actually, you're focusing on the count. and it is always challenging in nature. In one antiseptic factory where we were doing physical inventory counting, the physical inventory counting, they gave a stock that there are 1,300 boxes of antiseptic. And I was like, say, it was in Mysore, so I said, okay, 1,300 boxes of antiseptic. Now they started the count, 1, 2, 3, 4, 5, 6, they were counting. And almost it was like, say, 3 hours with some 20, 30 people around. So everybody was in charge of certain count of inventory. So now after 3 hours, we got to know that there are only 1,290 boxes, 10 boxes are missing. When the 10 boxes are missing, I said, I'm going to report this, there is a shortage of inventory. Now, the client said, no, sir, please, sir, don't report. The storekeeper, the store manager, they started actually, sir, it's not material, it's not at all, 10 boxes are not all material, but I was finding it very, very enthusiastic. Oh my God, okay. So everybody is like, say, almost they are requesting, sir, please don't report, please don't report. I felt like God for 10-15 seconds. I went up and I came down. This much respect, very good actually here. As an auditor, that is what the power of auditor. We should ensure that, okay, he tells that, okay, sir, there is a mistake. No, auditor is coming, auditor is going, auditor is such a wonderful person, it is not raising an issue. If you are not raising an issue, what is the use as an auditor? We have to raise the issue. Now, looking at them, what happened? I said, okay, fine. Because the way a client talks, body language is very much important. This is what we were missing during COVID, like when we are at 31st March 2020, where we are using laptops for doing the physical inventory counting. We are using the laptop camera and counting. It was not effective. Which side is showing, what is showing, we don't know. Because see, for example, the client is not making eye contact with you, not trustworthy. Not trustworthy. It's too much crying man. No, lot of problem. Not trustworthy person actually. And so body language matters actually here. 50-60% matters on the body language. One television showroom where we went for physical inventory counting, we said that moment we entered the television showroom, he said, sir, please take care of me, sir. I'll give you 80% discount. Sikakoda, 100%. Something is wrong here. How he's talking? 80% discount, unbelievable, not even available in Amazon or anywhere. So what kind of discount is this? Finally we found a fraud of 3 to 4 lakhs actually. So it's very important to observe the client closely, how they are reacting, how they are behaving. And these people, sir, 20-25 people, almost they were begging, sir, please, sir, don't report. As if I report, they lose a job. Definitely that was not a situation, and also it was not a case of modified opinion. It was not so material enough to have that impact. Now, so I said, sir, I have to make a reporting. I'll give you 1 hour time. You find out the balance in stock. If you find out, okay, no problem. I'll match it and close it. Now these guys are running left, right, up, down like that. So I was feeling very happy actually. So as an auditor, I'm doing something they are searching for 10 boxes. That is what we have to do, some change, create that impact of change. They are searching. Finally, they found the 10 box. It is in the research lab. Manufacturing unit audits are always cumbersome. You have to do a lot of walking from one building to other building. It is lying in the research lab. The research scientist has taken the 10 boxes and he has not informed these people. He has taken the 10 boxes. There, he and the storekeeper are fighting. How can you take these 10 boxes actually like that? The storekeeper is asking, why should I inform you? Why should I take your permission? Who are you? Entry level employee, who are you? I sit with the director, I talk with the director. Who are you actually? So now I understood that this guy was talking too much. Ultimately, nobody is above the system or the process. You have to follow the system and the process. You should have informed the storekeeper, taken a proper indent, a transfer to another department. Nothing was done, no paperwork was done. I said, sir, you may be bigger than this employee, bigger than the company also. Are you above the system? You tell me. You say that the rules, the process, the internal control is not applicable to you. Please tell me. Accordingly, we will highlight that. He said, no, sir. Then, sir, you should inform. No, 1 hour, almost 25 hours, man hours has been wasted because of you. These 25 people are searching for the boxes which are not there. Then we counted the inventory 1, 2, 3, 4, 5, 6, 7, 8, 9. Like a thriller of an English movie, 1 box is missing. Where is that 1 box actually? Again that 1 box. Again this storekeeper used one word actually, very, very not unparliamentary word actually. He used some golden word I can say. And I said, no, don't use such language. The storekeeper was very angry. Sir, he does not understand. He thinks it's the Lord of the Lord. He said, no, I opened the box, it is inside. So he had opened the box, he had put that chemical in the pipette and he was measuring something he was doing. Finally, the inventory was matching. All these 20 people, 25 people, they lifted the 10 boxes as if Dhoni lifting the World Cup in 2011. They were so happy like that. So inventory count, what happens, sometimes it requires a lot of patience, more of observing that how the client reacts to a different scenario and situation. What is the management instructions given to them? How they are counting? Who is counting the inventory? They are belonging to which department? Are they belonging to the same department? You have to be very careful and cautious. Sometimes physical inventory counting is also extremely demanding, very demanding in nature. How many of you love eating ice cream? Now? Now also? Yes? Don't mind, yeah. What's your name? Shankar. Is here?
Krishna.
Huh? You like ice cream, Krishna? Yes. What, you were raising your hand, madam? You like ice cream? So, sometimes what happens is eating ice cream, yes, we all like ice cream like that. But after doing physical inventory counting of ice cream factory, you will not eat ice cream for next 6 months. What is the reason? What is the reason?
We have to go inside the we have to go inside the freezing chambers and
Correct, yeah, freezing chamber. This 16 degrees itself is unbearable. That 20 degree, minus 20 degree, we are shivering. It's not the question of hygiene actually like that. Not like some waterfall is happening on the ice cream or some air is. No, don't think on those directions. Definitely, it's not that way. Given a chance, I will also go and eat ice cream. But the minus 20 degrees is unbearable. We are shivering. He is giving us clothes like that. We are loaded with the suit, boot, everything. Still we are shivering. 1, 2, 3, 4, run to bathroom. 5, 6, 7, 8, run to bathroom. The storekeeper is laughing on us. I think he is totally accustomed with the temperature, but we are not accustomed with the temperature. We are like say shivering top to bottom. Old man like me, I can stand there for 3 minutes. Articles they can stand for 6-7 minutes, but it became a horrible experience for us actually here. Where we are doing only more of bathroom trips, coming out counting which stock, what stock. That guy is laughing on us. I told the client that next time you call a Eskimo from North Pole and South Pole and do the physical inventory counting, we cannot do a Papa. Sri Ram Chandra. It's horrible. Sometimes those places we go, it's very, sometimes we feel that okay, how they are able to work. Go to Ranipet, Chennai, 50 degrees centigrade, where a person is working in a manufacturing unit where they manufacture tiles near Chennai, 50 degrees centigrade. And look at this ice cream factory, minus 20 degree, my God, it's all kind of experiences we can get actually in the physical inventory counting. That is the thing actually. So, one thing very important that the inventory record is the physical stock matching with the inventory record. And always we do physical inventory counting on what come on the balance sheet date, because that is a time, because it's a balance sheet item we have to do on the balance sheet date. Generally after advance tax 15th of March, I sit with the managers and said, okay, chalo, you have to go this location, that location, this location. We decide on the location. This is all location you have to visit. And 31st March, I think almost the entire office is empty. Sometimes I have to send my peon also, go and please do physical inventory counting. Only you are alone sitting in the office. Now thanks to government, all tax filing are done before 31st December or let's say before 30th September. But earlier, my God, because it was till 31st March, the client will also sing a song till 31st March. That's the thing. Thanks. See, unless and until we show stick to the people, they will not follow the law. That's the law. Government has understood very well. Chalo, you file it. Now, on 31st March, what happens? The entire office will be empty. Maybe I'll be sitting alone and like that, taking calls, this call, like that. That day, I'll have a feeling of as if I'm a receptionist actually sitting in the office. This talk, that talk. Now, 31st March, what happened? In one case, I gave work to a manager. Okay, you have to do physical inventory counting of this particular factory. So we decided we allocated the work. We told the client also that the manager will come on a particular date. Now, on 31st March, on 30th March night actually, yes, that's what we say, no, man plans and God laughs. How much ever planning you do, ultimately what is going to happen is what he decides, Sri Ram Chandra. So, we decided he will go, say for one manager has to go to a particular factory. He calls on 30th night, sir, something contingency has happened in the village and I have to go to the village. I have to go and attend something. Somebody has died in his village. So I said, okay, family first, what we can do? You have to go. And now what happened? All our plan goes for a toss actually here. So now I said, okay, nothing can be done. So I was such an egoistic person that I used to do planning for 6 months. Next 6 months, you will do this, you will do that, you will go to this client, you will talk to this person, you will get this documentation. Point to point, person to person, I was doing planning. 6 months, what you're going to do. But what happened? COVID happened. All my ego, cholesterol came down to a zero level. I said, God, now I was forced to plan what I'm going to do next day. So this is COVID is a very big lesson for us, for all of us actually like that. Okay, to move towards the digitization and also how to do the audit. Now, he said, sir, contingency has happened. Okay, chalo, what we can do? Next day the client calls, sir, your team is not there. You told that 31st March, your manager will come, person will come for physical inventory counting, but nobody has come. Then you will tell sufficient and appropriate audit evidence is not there. Then you will tell, I'll give a modified opinion, I'll qualify your audit report. I said what to do. Maybe the manager would have forgotten to call the client actually and tell that, see, I'm not able to come. So I said, okay, sorry, what to do? He cannot come. So this contingency has happened. Some clients are very, very understanding, they understand the situation. Some clients are not at all understanding. Okay, if he's not there, okay, you send somebody else should come. No, it is unprofessional. I said, somebody is dead in his family, we planned, it did not happen, what can be done? So then the client said, okay, sir, Oswal sir, don't take tension, what can I do? Now, there are certain situations we plan for 31st March, it does not happen. You know, in 1976, there was a movie called Jaws. How many of you have seen that movie, Jaws? Yes? Did you like the movie? Huh? What's your name? Sabal. Yeah? Punit. You like the movie? I was so scared watching the movie Sabal Punit when I was very young. I was so scared to go to bathroom also. I thought that the shark will jump from the bathroom pit actually on me. I was so scared. Now, the hero kills that shark with the last bullet. 31st March is like that for us, yes? 31st March is like that actually. It is the last day. Avat kelsa agle beku. At any cost the work should happen. What we can do does not happen. Now in such case, SA 501 also gives a guidance. Okay, subsequent days you do the physical count. You do a reconciliation, work back. Physical inventory as on the 6th April. And the whatever sales which has been made from 1st to 6th April, reduce the purchases from 1st to 6th April, arrive at the stock as on 31st March. So sometimes it goes out of our way. That's the thing actually there. Sometimes the auditors are being accused that you are not covering the material inventory. It is very, very important that are we covering the material inventory? Are we following ABC technique? Are we giving weightage to high value inventory? Because materiality matters a lot. In certain industry, when we look at the balance sheet, the inventory is immaterial. Now what shall we do with that case? Should we do a physical inventory counting? When an item in a balance sheet is immaterial, even if you don't do physical inventory counting, does not matter, no issues with that actually here. So this is what the stand we can take up actually here. That is why materiality is a very important aspect actually. SA 320, we should determine, is it a material item? Because we always go as per what the auditor designs and performs audit procedures to obtain sufficient and appropriate audit evidence to draw a conclusion for the purpose of giving opinion on the financial statement. As an auditor, I have to check that whether the financial statements are free from material misstatements due to fraud and error. It stresses on the word material misstatement. So, if an audit procedure is not applied on an immaterial item, then it is not a violation. You can always highlight that the item was below the materiality level, does not require such kind of physical inventory counting. That is how it is actually. India is such a diverse country. Every 100 kilometers you travel, the dressing habit, the eating habit, the way people talking habit, it is always changing, and that's the beauty of our country. You go to Sikkim, you will find ladies working there. Actually, they are constructing the road actually like that. Ladies will be running the business actually here and men will be sitting at home. He will call his wife, darling, what shall I cook? She will tell, cook chicken, masala, something. That guy will cook at home. Now that is the beauty of the country. I was shocked actually like that. Yeah, it's okay, it's normal in northeastern states. They call kappa and kappi. Now, so we got a physical inventory count of what you can say of a brewery unit in Goa, and the owner clearly highlighted that you please bring only the boys or men actually for the physical inventory counting. You don't bring any ladies actually. No ladies allowed for physical inventory counting. I said, why are you talking like this? Sir, that's it. You only bring men. That's it actually here. So certain times the conditions are put by the client. We go to the location, we reach Goa. Now you have Dagolim airport, we reach there actually, we just go check into the hotel in Panchin. And after checking the hotel, then I tell the guys, okay, we have to go tomorrow, we have to do the physical inventory counting. Chalo, let us have dinner. I'll come, I'll join in half an hour time. These two young article assistants, they are at the room. After half an hour, I go to the room, I knock on the door, nobody's opening the door. Then I come down, I meet the reception, madam, where are my two articles? Sir, they went away. Now why these two guys, youngsters, will try to spend their time with an old man like me? But again, I am a guardian for them, yes? So I have to take care of them, that's the thing actually. Next day, you ask the article, where did you go? Sir, we were here, phone not reachable. No, we were here, sir. Where you went and they are smiling, the body language shows that they try to mean something else. So I said, leave it, no problem. Youngsters, they'll always go, they like to travel. We won't go to the factory. In the factory, the production manager gives us a record, sir, do the physical inventory counting. Now, the counting is started by the staff. He starts counting. 1, 2, 3, 4, 5. Again, 1, 2, 3, 4, 5. Again, 1, 2, 3, 4, 5. Same rack is counting for 10 times. I was shocked. First I felt very amused actually, then last I got scared actually. Appa, if I see, look at him actually. I think I have to spend another 10 days in Goa to complete the physical inventory counting. Then you cannot shout on them all. We understood that he's drunk and why ladies are not allowed, we understood. Then I told the articles that we have to do physical inventory counting, we cannot depend on them. Now whether an auditor can do physical inventory counting, is it allowed by this standard? Can we do the physical inventory counting? Yes or no? What the standard says, the physical inventory counting should be done by the management, by the staff. You have to act as an observer. Now in this case, when you see the staff like this, sometimes you take the matter in your hand. So have you come across some clients actually, sir, you only count, like that they'll bully the article. See, if you are there, he will not talk. He'll say, hey, you only check. That's the thing actually. Vijayawada, in the jungle areas near Vijayawada, huge, like say pipes are there actually to be, like say put in the road or something. I think for water supply or something. They have kept huge amount of pipe outside. The company has manufactured the pipe, they have dumped there. Now they asked, the auditor asked the article, go and check. That person was telling me, sir, my God, sir, how to check those pipes? Sir, it's a jungle area. And you have to go inside one pipe, you have to come on the other side of the pipe. And it's so scary, sir. He said, the client says, you only go and count. I will not come. Now, sometimes he saw snake, sometimes scorpion. Sir, how do I go? I think you should be given an adventure award here, really. Did you do a physical count? Okay, sir, I did something, I did actually. But I was not happy. So this is like sometimes fate of a first year article. Third year article, he knows where the risk is there, where the risk is not there. Easy audit, comfortable audit, the senior article will handle, he will push the first year article. The first year article will be so excited, oh my God, super. He'll behave like Alice in the Wonderland, oh my God, super. Physical inventory counting, he's sitting in a jungle with snakes and scorpions. This is a problem. So now, can I, as an auditor, have an obligation to do physical inventory count by myself? Should I do that actually by myself? Yes or no actually, should I do it by myself? Answer is yes. The standard says we can do test count. We can take up the test count actually here. And in certain cases, we have to count the inventory on own also. So in this case, we decided that we'll do the count on our own and we highlighted that way. That's the thing actually. I cannot forget a scene where a huge barrel of beer, there's a tap at the bottom, beer is coming out of the tap, one employee, he's put his mouth, again, no, again, sir, Sir, if you want, you report it actually. Condition of inventory, you report it actually, sir. Last time an auditor went and interfered with a person, he almost got beaten up, sir. You decide what you want to do. I said, okay, sir, no problem, sir, no problem. Actually, that's the thing actually. I have sent my article to Kadapa, Andhra Pradesh actually, Kadapa. And there, what happens actually here, sometimes the language goes in a rough mode only. They are very good people, extremely good people, but sometimes it becomes a little rough language. Anybody from that side of our country, yes? Do you agree with me? Very nice people, but sometimes the language goes like that. Now, my article, he found one misstatement, physical inventory counting. This guy is telling, what is it? Killing, what do you call killing? Champistanu, something he told. One misstatement he has found this. The manager told that I'll ensure that he will not go like that. This article is shivering. Sir, he's talking like he's selling champi, something he's selling. I said, first you come from that place. I told the director, Arey, what kind of language is this here? Arey, it's normal, sir. It's OCB, ordinary course of business here. No, normal. Why are you taking seriously? So, now, what happens, my dear soldiers, actually, sometimes that thing happens. I said, you first come, actually, your safety is more important for me. So, sometimes it becomes a challenging also for doing a physical inventory counting. Now, if suppose say inventory is lying with the third party, suppose say it is with the third party, then we have to obtain the confirmation from the third party. That is the one thing actually. And also, sometimes you have to do physical inventory counting by ourselves. One third party was responsible for maintaining the godown for the manufacturer of a liquor. And I was shocked actually when the physical inventory counting was done by the team. They found that they had kept some 1,000 boxes. 1,000 boxes are there. In each box carton, you have 12 bottles or say 10 to 15 bottles of liquor, say beer, whiskey. Now one carton of, let's say, beer may be costing say 5,000. And suppose if there's a whiskey or a high malt liquor, it will be like say 40,000 or 50,000. So what happened? Everything is sealed, everything is tight, packed up, everything is proper. Now some of the cartons we asked them to open. So a few cartons, what happened? It is empty, totally empty. It is completely sealed, but nothing is there inside. We were shocked. And then what happened? Sometimes we said, okay, this is not happening because we found that 5-6 boxes, the entire thing was missing. Maybe the worker working there, he has opened the box, taken the liquor, closed it and gone out. Or maybe they have taken it and they have sold to somebody outside. And these kind of problems are there. So sometimes when it is sealed, it is also our responsibility that we have to ask them to open certain boxes. But now it is 1,000 boxes, how will you open? Then finally we decided that no, all the boxes has to be opened because this is not giving a proper signal. So, and the client will not agree. Client will say, no, your sealed box you're opening, but there is no other choice. Because out of 10 boxes I'm opening, I'm finding that 2 or 3 boxes are empty. It is showing me a very wrong deviating aspect. This we have to tell the client. And then when we counted almost like out of 1,000 boxes, almost 120 boxes, the boxes were empty, completely empty. They have sold the liquor. Now these kind of problems will happen. If you ask the storekeeper or the store manager, the warehouse manager or third party, he says that no, sir, I cannot do anything. What can I do? I am not aware of it. This is a standard dialogue statement they will make. You have to ensure that, make them put a signature and come back. So this is very important that with the third party inventory, again, we have to be very, very careful and cautious. See, when we should get a satisfaction that yes, I have done a very good job and I have ensured that I have found out a misstatement, I have escalated the misstatement to the client. Part 5 of inventory reporting out of 8 aspects is CARO 2020 reporting, which also talks about the inventory reporting. So whether the physical verification of inventory is done by management at a reasonable interval. I repeat, whether physical verification of inventory is done by management at a reasonable interval, and whether there are any material discrepancy. Is there any material discrepancy? Example, in this case where the inventory was missing, out of 1,000 boxes, 120 boxes the inventory was missing. Now this can constitute as a material discrepancy. Further, they also highlight that they have given a percentage. Earlier in the CARO 16 they were not giving percentage. Is that discrepancy 10% or more? First of all, Physical inventory counting is done by management at a reasonable interval. Now what is reasonable interval? Members, what is reasonable interval? Is it once in 3 months, once in 6 months, once in a year, or once in 3 years? What is reasonable interval? Again, 4 options: quarterly, half yearly, yearly, or once in 3 years. What is reasonable interval?
But based on business needs, at least it should be once in a year.
Once in a year, very good. Once in a reasonable interval here means it should be done once in a year. Then they talk about, they give a cutoff of what, come on, 10%. Is there a material discrepancy? This has to be highlighted. My dear members, CARO 2020 Companies Auditors Report Order, a type of audit report which is applicable only to company, applicable to all company. It is not applicable to small company, one-person company, private limited company with certain conditions to be satisfied, banking company, insurance company, Section 8 company. Out of 20 lakh companies, if you think actually are almost 18.5 lakh companies are private companies. So for them almost it is not applicable. So maybe 1 or 2 lakh companies this order will be applicable, that is CARO 2020. Now, further, it also highlights that when the company is being sanctioned working capital limit, so working capital limit means the OD and CC, if it is exceeding 5 crores, whether the quarterly return submitted is matching with the books of account. The quarterly return submitted is matching with the books of account. OD and CC, you put your hand, you will find problem. There is a problem actually. So, for example, in the books of account they will highlight that trade receivable is 10 crore, trade payable is 10 crore, and say inventory is say 2 crore. Now the working capital limit will come to around 2 crores. 10 crore is trade receivable, 10 crore is trade payable, and the inventory is 2 crore. Now, when the quarterly return is submitted, what happens? The quarterly return will become 20 crores will be like say trade receivable, 5 crore will be the trade payable, and now the inventory will be like say 5 crore or 6 crore. So what is happening? The bankers are grappling with the problem of NPA. What quarterly return is submitted to the bank and what statement is submitted to the what you can say by the client in the books of account, they are not matching. So always the bankers are concerned actually here, and CARO specifically it is only meant for bankers. This report is designed only for the bankers. If you see that it is either bankers or related party, that is with directors. So that is the whole mantra of CARO. Now he highlights that, see, in books of account you have a very low amount of inventory, trade receivable, trade payable. If you take the numbers as per books of account, you will not have your drawing power sanction limit, DPSL will never be created. But now the numbers are fudged, numbers are changed and submitted to the bank. The quarterly returns does not match with the books of account. Government says no, we don't want that, because the striking point is what CC and OD, we want to look into it actually, that whether the books of accounts are matching with the quarterly returns. In fact, in that particular case of bank audit which we went, actually we were shocked, and we found that the quarterly statement submitted and what is even in the audited financial statement, they are not matching. We confronted the bank manager that how did you approve this? On what basis you approve this? You see the numbers. The bank manager has not taken an effort to compare the audited balance sheet with what they have submitted on a quarterly basis. It's a variation. You have to call the party, you have to talk to them why there is so much variation in the numbers of quarterly returns and the audited financial statement. So this is one thing which we have to be very, very careful actually here. In some cases I have seen that the auditor, if it is a company, private limited company or LLP, they will download the financials from the ROC through inspection, and they will compare it. They will go extra mile, they will go extra step ahead that okay, this company is there, what they have filed. In one case what has happened, UDIN, if you see unique document identification number, UDIN is such a big relief for we auditors. I mean, we should really appreciate ICI for bringing UDIN. How much effort we put to become a CA, and now some person takes and forges our signature, takes advantage of our signature. In one case, auditor has certified the turnover as 3 crore. But when it was submitted to the bank by the client, it is submitted as 8 crores. There is a huge variation. You say auditor is wrong. Auditor is not wrong. Here what has happened, client or his accountant has manipulated the numbers and given the numbers to the to the bank. In some cases, what has happened, auditor's signature are being fudged by the accountant. He'll take, okay, this is a signature, no. Anyway, membership number I know, but thank God we have Udin. When they inspected, they saw that the turnover number given by the auditor was less, and here they have declared a high number. Mainly, Caro reporting, clause 1 to clause 21, entire Caro reporting is for financial institution and bankers. With that intention, they have designed this report. Example, see in the clause when he talks about the auditor should ascertain about whether the company is a owner of the immovable property. Is he a owner? How can we ascertain here? We are auditors, we are not lawyers. No, you ascertain, you find out. And every year you have to give. So the responsibility is being pushed on us like anything. Then 3CD reporting also talks about what you can say the Caro reporting. First year the client comes, too much income, too much tax, I cannot pay that much tax. First year article is standing, is observing what is happening, he is under tension, what to do. He goes to the boss and the boss he says, okay, don't worry, actually here we will reduce the inventory gets reduced, and now the value of the income also comes down, and the income comes down. Now the client is very happy, tax also is very less. The article is amazed, wow, super, excellent, what an auditor, intelligent person. But what direction we are giving to that article? What are we teaching that article? Just using the closing stock as a balancing number, a balancing figure. So the first most violated item in tax audit 3CD, even income tax people they say, is the closing stock. The second most abused item is the related party transaction. So our profit is very high. Okay, pay salary to uncle, to auntie, to this person, to that person, to create a person. And to grandfather who cannot get up from his bed, you give the salary to that person also. Every clause in 3CD talks about the violation. Every clause is talking about violation. Some tax evasion is happening. That is why they kept the clause. And believe it or not, closing stock, they have kept two clauses. Clause 14 and clause 35. Why they have kept the clauses? Because department knows that highest abused area is this one. First one, closing stock. Second one, personal expenses. And second one is a related party transaction, and third one is personal expenses. Personal expenses, I get offshoot actually here. One director got his daughter married. He paid 55 lakhs for his daughter's marriage expenditure. He has put that in the P&L account. Matching principle. Business expenditure should match with the business revenue. No. Add it, what is there? One mistake he did is that he invited me for his daughter's marriage. That is a mistake. I could connect the dots. Why month of the May? Sir, we took everybody for holiday. Boss, looking at the trend, definitely he will not spend. Audit fees itself he will cry and give to us actually. Then we connected the dots. Actually, we found that it is a unacceptable expenditure. Swimming pool construction expenditure I constructed at home is being charged to the P&L. Now 7 lakhs he has spent. I said whether all office people are coming to the house, taking a jump in the pool, coming out and giving a salute to you. What kind of treatment is this? Three most abused area. Every clause in 3CD will talk about only abuse. Now, method of valuation of closing stock employed in the previous year. We follow AS2, cost or NRV, whichever is lower. This is what we follow. If it is a material, then we always follow the cost. Cost will be the value of the inventory. Now, coming up to the other aspect actually here, details of deviation from section 145 capital A. Now, the problem is that income tax, which is a part of the Ministry of Finance and Ministry of Company Affairs, they have to sit together and talk together. They have to sort it out certain things actually here. You are telling certain things which you are notified, but the department say no. Now AS2 talks about the valuation of inventory. They say that you take purchase cost. Now 145A says okay, we will take purchase cost. Then you take all taxes which are not send-vatable. Okay, we will also take taxes which are not send-vatable. Then you take cost of conversion. Yes, we will also take cost of conversion. Then you take other costs. So I will also take other costs. But 145A goes one step ahead. It will add the the GST component of the closing stock, you say you add that also. Why should I add? No, you add that also. As per, I am following AS2. AS2 is given by your ministry only. Ministry of Corporate Affairs. No, they give whatever they want, they let them follow. You also add the tax component of the closing stock. If I add, the profit will go up, profit will increase. No, I don't care. You please add it. But the problem is that there are a lot of issues which are there actually here. Taxation and accounting never goes hand in hand. Taxation always goes like a snake and accounting always like a straight line, like a dharmaraya. This is what we should follow. This is the principle. So this is the challenge which we auditor face now, what to do. The problem is that in 3CD, the valuation of inventory should be given on inclusive basis. Whereas AS2 talks about exclusive basis. Example, closing stock, you purchase the stock, you record the tax separately, show it as a liability. Whenever you make the payment, the liability gets extinguished. But in income tax, they say no, that liability should be a part of your cost. When you pay, it will be shown as an expenditure. So now this is the treatment. This is called as inclusive method, where all the cost of inventory also includes the taxes also, which shows a very abnormal range. But they say no, you add the tax component also, but later you can show it as an expenditure. So here, a lot of issues comes in the form of presentation. Many of the auditors, we say it is not applicable. You have stock, you have to highlight this actually. No, not applicable. Like that, that's the thing here. And so this, we should avoid it actually here. We have to actually calculate it, make a presentation and then show it. Ultimately, income tax department wants to know that what is the real cost of the inventory, including the cost under inclusive method of accounting, which most of us we don't follow. The next clause is clause 35, which talks about the quantitative details of the inventory. Quantitative details of inventory has to be given. You're a trader or a manufacturer. There is a doctor who is a veterinary doctor and he is having an inventory. Let's say, for example, he is purchasing, let's say, pedigree or some dog food or fish food he is purchasing, and he is selling that also to the patient. Now, whether the doctor should also disclose this part as a part of inventory, he has this much stock of inventory, yes or no? Yes, no, why no?
Because for trading purposes, his job is not trading.
Correct, very good. This particular clause 35, absolutely correct, sir. It is not applicable to professionals. It is not. Similarly, clause 40, which talks about ratios, it is not applicable to professionals. I will see in some of the cases, they will tell no, sir. For doctor also we are calculating NP ratio. Clause 40 is not applicable to professional. No, Winman is calculating. Winman is made by a software engineer. What does he understand? The implication, no, it is calculated by that. So we have to read the guidance notes on tax audit. We should say 35, 40, they are not applicable to the professional. And here he is highlighting about the principal items. The principal items only should be highlighted here. That is the one thing. Then GST and inventory, definitely this is the seventh part actually here, which talks about the inventory and GST. Now whether inventory accounting should be done under GST, whether all inventory should be recorded, should we have a stock register to be shown under GST, whether it is required, is it mandatory? The answer is yes, unless you follow a composition scheme. In composition scheme alone, you are not supposed to maintain any books of accounts. Otherwise, in all other ways, suppose even if the turnover is less than 1.5 crore, you are supposed to show the quantity of inventory received, quantity of inventory issued, and what is available with you, how much inventory has got destroyed, how much inventory has got affected. So we as an auditor should ensure that a proper inventory record is maintained as per the GST. That is a very much important requirement which we have to highlight actually. Further, when we talk about the last part, part 8, inventory and the ratios actually here. Now, ratios, inventory as a ratio, it gives you a lot of good story about the entity, about the company, because we have a clear understanding. 3 very important ratio, current ratio, quick ratio, and inventory turnover ratio, they talk about the company like anything. Now, what is current ratio? Current ratio is a financial ratio. Basically, it is a liquidity ratio. It talks about that whether the company is able to realize the current asset and settle the current liability in a timely manner. Again, I repeat, are they able to realize the current assets and settle the current liability in a timely manner? That is a current ratio. Ideal current ratio for any company, it will be 2:1. 2:1 means what? For every one current liability, I have a current ratio of what? About 2 rupees. That is a thing actually. But if the current ratio is 1:1, it means what? The company is struggling. Now under Schedule 3 also, we are now giving what? Come on, ratios. And this is one of the ratios which we are highlighting in the Schedule 3 requirement also. That is current ratio. Current ratio means whether the company is able to realize the current asset and settle the liability in a timely manner and meet the short-term obligation. The next one you have is what? Come on, the quick ratio. Now, quick ratio, basically it is current asset minus inventory and current liability. Means what? If the company has the most liquid assets and the most liquid liability, how fast they are able to realize the liquid assets and settle the liability. So, quick ratio eliminates the inventory. It does not consider the inventory. Now, this shows that how much liquidity a company has. This also shows that how much amount has been parked in the inventory. Sometimes the over-investment is also done in the inventory, and that is why we have just-in-time purchases. These are all some aspects we are having in the area of inventory. In one company, it was a FMCG company, but basically it was they were having stores, various retail stores. So they were having 100 retail stores across the country. The company told that any branch should always have a high inventory turnover ratio. They should always have a high inventory turnover ratio. High inventory turnover ratio means what? For example, inventory turnover ratio is 10. It means what? The company is able to replace the inventory 10 times. So they put a condition for a branch that every branch should ensure they should have high inventory turnover ratio. They said, okay, fine. We'll have a high inventory turnover ratio. We'll ensure that high inventory turnover ratio will be there. Now, some of the branches were doing very bad. So they were having a very low inventory turnover ratio. They said that your inventory turnover ratio should always be, like say, minimum 8. So it means what? 8 times you're replacing your inventory. Now, most of the branches were doing very bad, but one branch always had a very high amount of inventory turnover ratio. It was like say 12, it was like 14. So it was very high. So they said, okay, my God, this branch is doing extremely well. I mean, their inventory turnover ratio is very high. Other branches are not doing well. They called that branch manager. They gave award to him. Very good, excellent, like that. You're doing a good job. Now, this was one of the judging parameter. Then they said, sir, this is not the correct thing actually, because see, ratios are always giving a direction to us. They are not a conclusive thing. You go and check what best practices is following this branch manager. What is he doing to ensure that there is a high inventory turnover ratio? When all the management auditor, they went to the location, to the branch, they were shocked to see that almost all the racks were empty. Almost all the racks were empty, half of the racks were empty. They were shocked, what is this, what is happening? I mean, you don't have proper inventory at all. He said, sir, what is required, that only I keep it. I don't keep much of the stock. Whatever is fast moving, I keep that only. And the footfall in the store was very less. He had some fixed customer, they were coming buying vegetable, they were buying milk, they were buying something. Footfall was very less. His main agenda was what? Why he wanted a high, why he was keeping a low amount of inventory. What is the reason? What is the reason? That's it. He wanted to maintain a high inventory turnover ratio. That was his intention. He did not have any other intention that ensure that high inventory turnover ratio. The company, the top management was slammed by this approach. They said that this is not a correct approach and people are taking advantage. So sometimes no, you can't trust the ratios. Ratios will always give you a direction. Okay, this direction the company may be. But what it is, sometimes you have to go and make a deep dive and find out about that. Okay, so that is one thing actually here. So Now, these are the 8 parts, 8 most important aspects about the inventory. First of all, what is the inventory? What do you mean by inventory? Yes, it is used in the sale in the ordinary course of business, used for the production, used for the processing for the purpose of production. Then we learned about the second aspect, that is how do you value inventory, what does cost in inventory includes, how the cost is done, cost or NRV, whichever is lower. Then we spoke about the presentation and disclosure of the inventory, how it is being presented. The presentation should be as per the requirement of the law, as per the requirement of the standard. And Schedule 3, in some cases, they are not giving inventory formulae. Is it FIFO? Is it weighted average cost method? They don't give it. That is a big problem. In some cases, instead of using NRV, they are using market value, fair value, which is unacceptable. And then we discussed about that inventory with SA 501, when physical inventory counting is done, we have to comply with the requirement of SA 501. Various condition and inventory is lying with the third party. When the inventory count is impracticable in nature. One auditor, he called me, "Are Oswal sir, do you have some articles with you? We want to send for physical inventory counting." I said, "Yes, articles are there. No problem." So what it is actually, what is the type of unit? He said it's a chemical factory, they manufacture acid or something. I said I will not send the article. So certain places I'm really worried actually, especially pharma company, physical inventory counting is so difficult, they'll be formal in, you have to go and check the inventory. And sometimes it's used to make a person unconscious. It's so difficult, you can't stand there also. Then we take a call, is it material? Then we do. It is very difficult. Sometimes you cannot, they give you mask and everything to stand there, but it is highly difficult. And then we discussed about CARO 2020 reporting, the 3CD reporting is also there, and finally the inventory ratios. Okay. So any doubts, members, if you are having any doubts, any queries on the topic, today's topic, inventory? Thank you very much actually. Thank you very much for the patient listening. Any feedback, anything is there, please share with me. Thank you very much.
Inventory is the subject matter of, or is a subject of highly vulnerable, highly vulnerable item for manipulation by management of the organization, which might put the auditors, the chartered accountants, into trouble. Working papers on the verification of inventory need to be kept properly. NFRA is asking for working papers on a regular basis. Members, working papers are the saviors for the professionals, which needs to be compulsorily held for the required number of years, as CA Vikas Oswal sir said, before the auditors of the auditors, that is NAFRA and Ministry of Finance, Government of India, come heavily on us. Let us be, in order to showcase that we have worked and with proof or records, as we always used to do that, right? With that note, a big round of applause for that wonderful session by the basis what we have been doing all these years. Let us make it a habit. On behalf of members present here and all the managing committee members of Bangalore branch, I would like to hand over a gift voucher as a token of respect and gratitude. Can I request CA Prakash sir to come on to the agenda?